With the next session, we are going to look at how to enter the opening balances. What are opening balances? Opening balances simply refer to the accounts which have been carried forward from the previous accounting period. When a company does not have opening balances, then it is a startup. In this case, we have opening balances, which means we have been transacting from the previous financial year. Let's see how.
So we are back on step number 4. Inventory management, we already activated it during the creation. So we go to step number 5, where we are going to post the opening balances from the previous accounting season. When a company has opening balances, it means it has been trading from the previous financial year. But if it is beginning for the first time, then we call it a startup. So if we look at this exercise, we have opening balances. The first category, there are fixed assets. They are here. All pickup vehicle, building, and so on and so forth. Then we also have depreciation, which is here. Then we have the bank accounts, 3 bank accounts, Crane, Barclays, and Citibank. Then we have cash in hand in 3 currencies. Then this company also has got debtors who are our customers, but they owe us money. Then it also has suppliers or creditors who have been supplying the company or the business with goods or services, but they have yet to be paid, so it becomes account payable. The company also has got a loan, salary arrears, and a VAT. Right, we are now going to enter the opening balances, and we start with the fixed asset. The first one is an old pickup vehicle, which has a opening balance of 5 million. Transport truck, 12 million. Buildings, 248,500. And office equipment, 12 million. There we go. Right. This is now how we enter the opening balances. We come to the account info, where there is under masters, highlighted letter is A. We go there, and we go straight to the ledgers, highlighted letter is L, and C for create. And the first item is all pickup vehicle, so we enter it here. We type it there. It is in the category of fixed assets, so we simply type F, and then we select fixed asset from the other side on the right. It is in Uganda shilling, of course. Inventory values are not affected. So the opening balance is 5 million, which we enter here. Hit enter. It's a debit balance, and then save. The second one is a transport truck, which we also enter in the same way. Transport truck, enter. It's also a fixed asset. There we go. The opening balance is 12 million. 12 million Uganda shillings. It's a debit balance. Hit and save. The next one is buildings. Buildings. They are fixed assets, the same. We enter the opening balance is 248,500, like that. Save. Then lastly, in the category of fixed assets, we have office equipment. Office equipment, which are fixed assets, and we have 12 million. That is all for fixed assets. That is all for the fixed assets and debit balance. That's right. We are going to create now, next is accumulated depreciation. And we have to enter in the same way under account info. And then it is under ledgers, the same way. And we go to create. So we have to be careful not to repeat the exact names because we already have old pickup vehicle as a name. So this is what we do. Old pickup vehicle, old pickup vehicle. I will abbreviate accumulated depreciation like this so that the names don't conflict. Now, accumulated depreciation, we are not putting it as a fixed asset. We are going to make it as an indirect expense. So we press Alt and then C on the keyboard to create it. Alt and C. So we are going to create a group called accumulated depreciation. Accumulated depreciation. It is indirect expenses. There we are. And we save it. So we shall put all depreciation there. Inventory values are not affected. So for the pickup vehicle, depreciation is 3,400. Okay, there we go, we save. Then we go to the transport truck, same accumulated depreciation. We'll use the same group. The amount for the transport truck is 4 million. There we go, it's a debit amount. Then we go to buildings. Buildings, we go, okay, it may not accept because of the same name. Buildings, we have to use that accumulated depreciation to distinguish it from the other previous accounts. So we enter the accumulated depreciation for the building, which is 85 million Uganda shillings. Then finally we have office equipment. Office equipment, we do the same accumulated depreciation. So office equipment, we have 3 million. That is it.